In this video, I will be going over a dividend portfolio. I am not a financial advisor. Any stocks discussed in this video is for general informational purposes only. It is not intended as investment advice. It is always recommended that you do your own research before starting any type of investment. The final account I opened was a dividend portfolio. My dividend portfolio was another broker account, but the focus of this account was a more stable income. With a dividend portfolio, I was able to more accurately predict my income. I will try to break this account down because I believe it is very important to understand. Opening the dividend portfolio was really easy to do. Since I've already had multiple Charles Schwab accounts, I logged into my Charles Schwab and hovered over accounts. Once here, I came down to open an account. When the accounts page opened up, I chose brokerage. Once on the brokerage account, I chose individual brokerage account and started the application. The process for this was exactly the same as the first brokerage account I opened, except all of the information was already filled out. So I'm not going to walk through this again, but you can refer back to the first brokerage account if you need help. Once the account was opened, I came up to service and went to account settings. Once the account settings page came up, I came over to the right here and clicked on account, nicknames, and groups. From this page is where I labeled each account. So for example, if this was the account I just opened and I wanted this to be my dividend account, I would just type in dividend account. Or if I wanted this to be the calls and puts account, I can relabel it to calls and puts. So once these accounts was open, I relabeled them to coincide with the blueprint. Once you have your account open and you're ready to start buying dividend stocks, the first thing I'm going to show you is how I tell if a company pays a dividend, when it pays it, and how much that dividend is. Learning to pick dividend stocks it could be complicated, but it's really not. The first thing I always tell people is think about places you go all the time. Do you go to McDonald's? Do you shop at Walmart? Do you go to Starbucks? These you would start off with places that you know and that you know are going to be around and are reputable companies. So for example, if I wanted to see if Starbucks pays a dividend, what I would do is in Google, I would type in Starbucks X dividend date. And this could be done for any company. So you type in the name of the company, X dividend date, and then you can search for it. And you will come up with a list. I usually try to find a NASDAQ one and click on that. And I know I have the right one when this little purple banner comes up. So this will tell you that Starbucks does pay a dividend, an annual yield of $1.96. But if you scroll down a little bit, this is where you can also check all the previous history. Looking at Starbucks, this goes all the way back to 2010. So this little chart comes up and this is what you want. So looking at this chart, we can see that Starbucks X dividend date is the 10th of February. This means you have to own the stock the day before the X dividend date. So as long as you own this stock by February 9th, 2022, you'll receive the next dividend. This cash amount tells you how much that dividend is going to be. So as long as you own this stock by February 9th, you'll get 49 cents for each share that you own. Then the next couple things here, declaration date, This is just the day they declare the dividend. We don't need that. Record date, this is just for their books. We don't need that either. Payment date is when you will get paid. So everyone who owns Starbucks on February 9th or before will receive 49 cents for each share that they own, and it will be deposited in their account on February 25th. So if you own 2 shares, you will get 0.98 cents. You will get 49 cents twice. 3 shares, you'll get $1.47, and etc. And looking at the date, it's usually within a day or two. Here was November 10th of 2020, November 10th, 2021, February 17th, February 10th. That's off. There could be multiple reasons, but usually the date is really similar every single year. Let's say that you're taking the kids or you're going to McDonald's, and you see that every McDonald's you go through is always packed. There's always cars in the line, and you're thinking, I wonder if they pay a dividend. It would be the same process. You would type in McDonald's X dividend date. So you type in McDonald's X dividend date and you search. And again, I look for the NASDAQ one and I click on that one. And I check for the purple banner here, and seeing they pay an annual dividend of $5.52. And looking down here, we know that if we own the stock before November 30th, so November 29th or earlier, we'll get $1.38 per share, and it'll be paid into our account on December 15th. Now, you can see McDonald's has upped their dividend. They were paying $1.25 in 2020, $1.29 in 2021, and they've now increased it to $1.38. So if you look back and you scroll down, in 2013 they were paying 77 cents. So if you bought this stock in 2017 and you own this each year, your dividend, you're basically getting a raise, and your dividend yield is going up and up. So once I started building my dividend portfolio, I started off with companies that, I know or use or see every day. A lot of it is stuff I used in the past, like Lowe's and Home Depot and Starbucks, McDonald's, Walmart. And then as I started to do more and more research, there is something known as Dividend Aristocrats. I type in Dividend Aristocrats here in Google. A definition pulls up here. A dividend aristocrat is a company in the S&P 500 index that not only consistently pays a dividend to shareholders, but annually increases the size of its payout. In order for a company to be part of the dividend aristocrat, a company will be considered a dividend aristocrat if it raises its dividend consistently for at least the past 25 years. Some of these dividend aristocrats rank them according to additional factors such as company size and liquidity. For instance, having a market capitalization in excess of $3 billion. So dividend aristocrats, if a company is paying a dividend, they have to increase that dividend every single year for 25 years straight. If they fail to increase it, they won't make the list. Couple of key takeaways. A company is a dividend aristocrat if it increases the dividend it pays to shareholders for at least 25 straight years. A dividend aristocrat must also be a member of the S&P 500. They tend to be large, established companies. Many are largely recession proof. That's a bonus and a plus there, because that's something that we face every few years, and we need to make sure that the recession proof is there. Dividend aristocrats are similar to dividend kings, which are firms increasing dividends annually for more than 50 years. So these are I'm just giving the example, a couple of things I looked at. So dividend aristocrats and dividend kings are ways to find more. And you can find a list of the aristocrats. And this article is on Investopedia. So if you wanted to learn more and do research, there's just a couple of things I used. So back on Charles Schwab here, I just wanted to show you this. This is kind of an account we don't really use much, but it currently has AGNC, which is a dividend paying stock. We have 127 shares. And before I move on here, I want to, if you come up here to settings right here and you click this little settings tab, because if you look at this right now, it shows quantity, price, market value, cost basis. Also, if you wanted to reinvest dividends, right here where it says reinvest column, you can click yes. And when you receive a dividend, it'll automatically buy that same stock again. I personally don't suggest it. I don't use it. What I do is all this money will be going back to pay the policy because it's all part of the blueprint. But if you click right here on settings, because we don't even know if this stock, how much the dividend, any of that information. So I'm going to click on the settings right here, which is right above the stocks themselves. And what this does is you can kind of change and add what you want. So right now, this is currently what was on there. I can go in here and add the dividend, ex-dividend date, which we were looking at earlier, the last dividend they paid, the yield, if I want to see how much the yield is. I can add 52-week high, 52-week low, different things. So right now, I'll just go ahead and add the yield, the dividend, and the ex-dividend date. And now I can see that the ex-dividend date is January 28th. It pays a 12-cent dividend. This is a 9.8% return. And one of the cool things about Charles Schwab is it gives you basically it'll average out and give you your monthly income. So looking at this, we see that we have 127 shares of AGNC that pays a 12-cent dividend. This company this is a REIT, so it pays dividends on a monthly basis. All blue collar, most companies, they pay dividends every 3 months, but this is a certain category that pays a monthly dividend. So looking at this, we have 127 shares and at 12 cents a share. So if we added this up and we had 127 shares at 12 cents a share, that'll give us a monthly total of $15.24. So back on Charles Schwab, I'm going to hover over accounts again and go to summary. And once it brings up the summary page, right down here on the bottom left, I'm going to click on show investment income. And if we remember, we came out to $15.24. So they take your average income. It says $15.30. That's because sometimes you have cash still sitting there that you haven't bought stocks with, and you gain interest on that money that's left in that account. So if we break this down, we can see that the dividends is $15.24 and we'll gain 6 cents in interest. I don't usually include interest, so I just basically look at dividends, but it's pretty accurate down to the cent. So with that 127 shares, $15.30 or $15.24 will be deposited every single month into the account, regardless of what that stock price is. So a lot of people are confused too on that. If, for example, AGNC is $15 a share, it'll pay a 12-cent dividend. If AGNC drops to $14 a share, it's still going to pay a 12-cent dividend. If AGNC goes up to $16 a share, the dividend will be 12 cents. So the dividend amount does not change with the stock price. Is it possible for a company to lower their dividend? Yes. If the economy, goes down, tanks and crashes. Ford, for example, when all this pandemic started, Ford dropped their dividend to 1 cent, but they just recently reinstated it. So they may temporarily drop it, or it could just be part of a company that's just cutting their dividends. So that's why just be careful which companies you're picking. Make sure that they are blue collar companies, that they are reputable companies. I did this because I plan on never selling dividend stocks. They will be passed down from generation to generation. I don't ever plan on selling them. So unlike my what I call my trading account that I do my calls and puts, or I sell the options in, that fluctuates every single week. But the dividend portfolio is here to stay. So we can see that again, the dividend is accurate down to the penny. So let's look at another stock. So I pulled up Coca-Cola here, and we could see that Coca-Cola pays a 42-cent dividend. So I'm going to go over now how to buy a share. So I'm going to come up, hover over trade, and go to stocks and ETFs. Once I enter that, the little buy comes up here, and then you'll type in the symbol. If you don't know the symbol, you can click right here on lookup and find that symbol, or if you are already looking at the ex-dividend date, you could see that symbol there. So we enter the symbol we're going to buy. We're going to do a quantity of 1, and it will just be a market order. You can set limit order. Right now, if you look at Coke, it's at $60. The bid is at $60. Ask is at $60.13. So if you wanted to buy Coke at say $59.10, you can come to limit order, and you can set the limit and how much time. And so you basically set good until cancel. It'll last for 2 months. As soon as Coke drops down to $59.90, it'll buy that share for you. So for this example, we're just going to do a market order, and we're going to buy 1 share of Coke. And we can now see Coke has been added to our list of stocks, and we have a quantity of 1 with the 42-cent dividend. So if we add Coke, 1 share of Coke, 48 cents dividend. This is paid out every 3 months. So that average is 16 cents a month. Take 16 times it by 3, 48 cents. And how do I know that's paid every 3 months? Because when I look at the ex-dividend history, I can see that it's paid in March, June, September, and November. So if we were getting $15.24, and now we added a share of Coke, which averages out to 16 cents a month, our new total should be $15.40 minus interest. So when I come back to the summary and I click on investment income, I can now see $15.24, and dividends increased to $15.66 starting in March. And then when we go to April, we can see dividends $15.24. So it's balancing it out. It's giving you, if you look at the monthly, it's actually $15.44, which is the $15.40 plus interest. And it gives you a really accurate picture of what you're going to be receiving monthly. Now understand that, if you actually look at it, $15.24, it jumps to $15.66. That's because even though it's being paid every 3 months, what Charles Schwab is doing is they're dividing it and giving you a monthly income total right here. So what this means is now what we can do is we know, for example, this is a smaller amount, but just for example, we know that we're going to get $15.44 every month. So we can now, what I do is I get this balance to about $100, maybe $200 or $300. And then once it's there, I can come up and go to accounts, and I'll just hover over that and go to transfer and payments. And this will be an online transfer to my checking account. And I would select whichever broker account I wanted to transfer the money from and select it to my personal checking account. And once that comes up, right here under frequency, I could put monthly. So I can now put $15 monthly. And what will happen is the dividends, now this is all automated now. So the dividends will automatically go into the broker account, and then the broker account will automatically transfer to my checking account every single month, bi-weekly, weekly, however I set it up. So as I increase over time, and let's say I keep buying dividend stocks. So I bought 1 share of Coca-Cola, but basically I bought 1 of each share that I wanted in my dividend account. And as I got money and as it rolled in, I bought more and more of those shares. So, you know, I would start this off. I started it off, I think, at like $100 a month. I just let it build until it got to 100. And then as I increase the dividends, I keep doing that. And now let's say it's showing a monthly income of $150 a month. Then I would come in and switch it. So now $150 a month will be going to my checking account every single month. And then as it moved on, $200 a month, then $200. And I just, as it increased in $50 increments, I transferred it. I just changed the amount to where eventually this can be 3, 4, 5, 6, 12,000 a month going to your account automatically. You don't have to do anything. It's all automated at that point. Being able to automate the dividends straight to my checking account is awesome. It's like having a direct deposit set up to my account. In the next video, I'll do a review of the Chatman's boat.